Kyle Thompson, and we have special guest, Mr. Chris Powers out of Dallas, Fort Worth. How are you doing today?
I'm good. Thanks for having me on, guys. I'm excited to do this.
You're one of the few people that we booked like earlier this year, and you're like 5 months out.
Yeah, it's been a crazy year.
Are you always that far out in your scheduling?
This year in our business has been a bigger workload, and I'm just super tight with my time and how I'm getting through the days. I got 3 young kids and all that good stuff, so trying to be more ruthless. Sorry it took 5 months, but I don't know any other better way to do it.
Hey, it is what it is. How old are your kids?
I have a 7-year-old daughter, a 4 about to be 5-year-old daughter, and a 2-year-old son.
Okay, so I have mine are 6, 4, 3, so I'm right. I know exactly what stages you're at.
It's a lot, man.
It's a lot. What's funny right now is that I have my wife's at a doctor's appointment, so I have all my kids in the other room watching a movie, and at any moment I could step away because I have all 3 kids.
You will have accomplished a ton if those kids stay watching that movie for an hour. I don't know if mine would do that.
Well, I've been training them since birth.
That's awesome.
I've been training them since birth. It's definitely a challenge for sure. It's been funny. So you are a commercial investor. Can you give somebody like 30-second pitch if they've never heard of you before? Kind of give everybody just a general idea who you are.
Yeah, Chris Powers, live in Fort Worth, Texas. I'm the founder and chairman of a company called Fort Capital. Fort Capital is a vertically integrated real estate investment business with a focus on buying industrial real estate, primarily through Texas, but also throughout the southeastern United States Sunbelt. I started the company in college, buying rental houses, and that's what I've been doing for the last 20 years. Today, we have a team of a little over 50 folks here in the States, and we have some overseas talent as well. We manage about $1.2 billion of assets under management, all primarily industrial. And we've done that through one-off syndication. So we don't have a committed fund. We raise money on a deal-by-deal basis. And when I say fully vertically integrated, we do our own management. We also do some of our own leasing. We also do our own asset management, financing, acquisitions. And so we touch a lot of the business. And our mission and the way we've kind of decided to run our company is to be the best real estate operator in the world. And so, that in short just means a lot of people in our industry are into doing deals, which obviously you have to do to build the company. But there's so much more that happens after buying something. You got to own it and operate it really well. And we just have found that the best companies in the world are exceptional operators. Deals is just part of it. And so that's been the main focus of our company for a long time. We've built proprietary software that runs our business that's unique to us. But yeah, it's been an amazing journey. Industrial real estate's been fun to be in. Texas is a great market. And so super fortunate and just have an incredible team.
50 employees. What is your business model? Are you buy and hold? Do you buy cash? Do you leverage? Because a lot of people that do different types of syndication/fund models, and $1.2 billion in assets, that's a lot of cheddar. So
yeah, so that's definitely not all my money.
Absolutely.
We do it on a deal by deal basis. So a deal will come in and we will secure the bank financing, which is usually 60 to 65% of the purchase price. We will then go to our investors, and we have, I think we have over 900 active investors now, and we'll, what they call syndicate, will raise the money for that deal. That deal will have its own structure, its own set of investors, and people are just investing in that deal. And then as far as hold period, the way that these are structured, we underwrite everything to a 5 or 7 year hold, but we really have the discretion to hold longer if we want, hold shorter if we want to refinance it and hold it long term. We're not beholden to any one time period. So I tell people there's deals we've owned for 2 years and there's deals we've owned for 9 or 10 years. And really the deciding factor in there is, have we accomplished our business plan? Are we being offered something that we felt like is reasonable, Or do we just feel like there's still a lot of room to grow and holding it isn't a heavy lift and we can continue to kind of ride the wave? So we take it, we monitor each thing deal by deal, but I would say our average hold period is probably somewhere within 5 to 7 years.
That is a lot of corporations. Because if you're syndicating each deal, you have to raise that's a lot of corporation management, check accounting management. Is that all in-house as well?
That's all in-house. So I don't know the exact number. It's in the 30s. We manage 30 different entities. So Fort Capital, the way we're structured is Fort Capital LP is where all of the people are employed by. So Fort Capital LP owns, a bunch of desks and computers and hires people. And then each deal sits in its own entity and forms a contract with Fort Capital to manage it, to do all the things that we need to do to add value. So each piece of real estate sits in its own entity. And yes, it's a lot to manage, but again, in our effort to be a great operator, I think we've built great solutions, so it doesn't feel like as heavy as a lift as it might sound.
I love that you touch on the operations part of things, because a lot of businesses and a lot of people in the real estate business, they always talk about the deal. It's like, oh, the deal's so sexy, right? But it's like, what happens behind the scenes? It's almost like if you don't have those operations in place, it's chaos. So
yeah,
we talk about that.
I mean, you nailed it. You'll see a lot of people get in this industry that are deal people, and what they'll do is they'll start a company, they'll buy 3 or 4 deals. They might be great deals, but they quickly look up and they realize, okay, we own 4 deals that need a lot of work and management and decision making and accounting and all the things that go into owning a deal. And so at some point you have to start focusing on how are we going to operate, once we've bought. And you don't really, when you see headlines in the news, it's all about deals getting done, a big closing or a big number. And those are, shiny, fancy numbers. But what you don't really hear headlines about is what happens for the next 5 to 7 years after they buy it. And for anybody that, is active in real estate, especially as an owner, it is not passive at all. It is it's very intensive if you're going to do it right. So if you want to be passive, you could be a limited partner where you're just writing a check and getting a distribution. But for those actually owning the real estate and working, it's a very intensive job if you want to do it well.
Absolutely. I love that.
Is there a strategy used to find talent? Because you have to find a organization like that. You have to organize and kind of source talent pretty aggressively. Not even aggressively, but you have to keep an eye out for it. But is there like a best practice for you to find good talent in your organization?
Yeah. So what I would say is, like, early in the company, when you don't really have a track record or much credibility, unless you're coming out of some huge company that you have a track record with, it's harder to find talent because, people are taking more of a risk. One of the benefits of a growing company that has a long track record is it's seen as not only a safer place to work, but, a lot of opportunity. So one benefit we have going for us today is we always have people submitting applications or getting in touch with us, whether we have roles or not. We call that building the bench. We always have jobs positions open, but some of those don't mean we need the job next week. It's just like, if we could find the right person for this job, we would just make the job happen and hire them. Sometimes finding the right person can take a while. I think some of the worst hires are when you have to do it under the gun and really quick. The other part is we tell our team, ABH, which is always be hiring, like, while you're out on your day-to-day life, whether it's friends, family, you're at lunch with somebody, always be kind of thinking, like, is this somebody that we could work with? And kind of building a mental bench of people in your head that if you did need a job to be filled, they would be there. And so it's kind of this always hiring mentality. And then once we have engaged in a process and we're working with people, we use something called Culture Index. We use a lot of ways that we hire and make sure it's the right fit. But a lot of our companies have been predicated on this. I don't want to call it a personality test. It's a traits test, but it tells you a lot about who a person is. And so we're not just looking for the right skill set. We're looking for the right temperament and the right personality to fit that role as well. So hiring is a big thing. Your people are your best assets. And, that's how you build your culture, is with great people. And so it's something that's very important. And again, with scale, I wouldn't say it gets easier. I just think there's more of a selection of people to choose from.
Absolutely. I love how you touch on that too, that you're almost building like, because you want to have good talent and you hope they stay around forever. And some people might leave and do their own things, or some people might just fall off the wagon, and all of a sudden they're only good until they're good, right? And then you're kind of building like that pipeline by keeping those options open and having those listings for the jobs, even though you might not be quite ready to fill that position, but it's like you're building that pipeline.
For sure. And, one thing we've done really well that we it's a big staple of our company. We're in Fort Worth, which TCU, Texas Wesleyan, UTA, UT Dallas, there's a lot of universities here. We've built an incredible internship program. So a lot of people that we've hired have been prior interns with us. We run that program like they're full-time employees. So it's not just a place to come sit for the summer and make copies. We give them real things to do and really test them. And that's also a great way to build kind of a bench. I mean, not for every role. If it's a brand new role in the company that they've never had before, we might do a little more searching. But for most of our staple roles, it would be a shame if we didn't already have an idea of who the next hire might be. We wouldn't have been doing our job.
Absolutely. I kind of want to touch on. Go ahead, Daniel.
I was going to say, are you sourcing them from the college themselves?
So we'll go to the career fair, but if you go to our website right now, we have an internship application available year round. So we're getting people applying year round, and we usually have two. Kind of goes with the college schedule, but you usually have like a fall and a spring, summer kind of cohort. Some people will stay through it all if they want to work throughout the year. Summer's kind of our biggest. I don't know how many we have across the company today, but I bet we have 8 or 10 interns this year. And like I said, especially this generation, they're so talented in ways that our generation, from the tech side and just the way they see the world, I'm amazed constantly by the unique perspective and things they know about the world that they bring in. And so we're always excited to have them. And like I said, a lot of them end up converting to full-time people down the road, which is a dream.
That's really cool. I've always heard the strategy of picking them off from college, but I think I'm gonna have to make active effort to pick them off from college, because there's some young talent out there.
There is. And if you treat it seriously and people feel like they're showing up to a real job where they're going to get a lot of experience, you'll get the best candidates. And, like I said, this generation of kids is super talented. They have their own unique ways of looking at the world, just like every generation does. But we really want to tap into that talent. And I think it's important for every company to stay young and fresh. And so it's a benefit to being in DFW. There's a lot of colleges already here, but we take in people from Notre Dame. We have people from Virginia. They're not all coming from Texas. They come from all over the country.
That's amazing.
I want to touch on what you said earlier, where you have a pool of investors you said around 900. Are you always actively trying to add to that pool, or do you almost add like a FOMO to where you're kind of like, hey, no, we're kind of capped off right now for who we're adding into our list for the opportunity to get a deal?
Yeah, it's a great question. When we started, the goal was never to have 900 investors. We started when we were young, and we would, what you call pass the hat. We would do a deal. We'd raise some money. We'd get new investors. We would do well. They would kind of introduce us to some of their friends and family. It just kind of kept growing. I have a podcast too. And just the track that attracts people. The company's track record is probably the biggest attractor of new folks. But the way it stands today, no matter how much money somebody's giving you, once they give you money, it's a different kind of relationship when you're handling somebody's money, whether it's a $10,000 check or a $10 million check. Mm-hmm. And so we do a really good job. Our investor relations team does an incredible job of vetting them. So there's a whole process investors do to get on our list, to see our deals and to invest with us. We want to make sure we're as good of a fit for them as they are for us, because if there's misalignment in personality or expectations, it can just put a lot of entropy and drain on the business to deal with investors that are tough to deal with. So the answer is everybody's is happy to apply to be an investor with us. And I would say probably 1/3 of the folks that do, maybe more than that, we actually end up working with. And as time has gone by, we've learned who our best investor prototype is, kind of their financial situation, where they are in life, what they do as a career, the size of checks they write. And so we're getting smarter and smarter about who to accept over time.
Would you say your biggest channel of getting new investors that fit that model is from referrals?
Yeah, I think the greatest referral, the best compliment we could receive at Fort is one investor telling another friend of theirs that they obviously trust that they should put their money with us also. Again, money can complicate things. It makes the relationship a whole different level. And so, yes, I would tell you a referral from somebody that's already been an existing investor. I'm not saying it's always the best next investor, but they usually are very strong. There's a lot of trust embedded day one. And it takes a lot for one of our investors to go out on a limb and tell their friends to invest with us. They're kind of taking a risk too. If we weren't to do well or lose their friends' money, that would look poorly on them as well.
Exactly.
Absolutely. I want to talk about your investor relations. So when did you create your investor relations department, and how big is it currently?
Right now, it's there's 2 full-time people, and then there's people that support those folks. And I think we decided to build out a formal investor relations team probably 3 or 4 years ago. I mean, before that, we were still managing a lot of investors. We use a software called Juniper Square, which is an incredible piece of software to help manage lots of investors and lots of reporting and all that, which made it easy. But it got to a point where we had a lot of money under management. You're always doing deals. So there's investors always calling with questions. Even once they're in a deal, we might have owned a deal for 4 years. You might have somebody call in wanting some more information on something, or, investors have things happen in their lives, and maybe, they're just calling us to say, get a check on what's going on. So it required a full-time team to interface with lots of investors, ask lots of questions. And then when you're actually doing the fundraising, it's a full-time job to syndicate all the money, make sure all the documents are signed, make sure the presentation's been out, make sure all the money comes in, make sure the investors are notified we closed, and make them feel very comfortable. We want to make the investor experience the best in the business. You don't have to be the biggest company with the most resources to do that. You just have to make it a priority. And so a lot of investing, obviously you give money and you want it back. You want more back than you came, but there's a lot more to it. It's how you're treated along the way, how quickly you receive quarterly reporting, distributions, K1s, how quickly you can answer questions. And again, you can imagine with 900 people, we don't have 900 people calling all the time, but if even 1% of those are calling, there's always 10 to 20 people that we're talking to.
Right.
Is there something that you implemented in your investor relations that heightened you're able to raise money quicker, or that just heightened that ability in that department?
Can you ask the question again?
Is there something that you did early on that you noticed that was something that was missing that increased your output from investor relations from raising capital?
Yeah. So one, again, when you're doing a deal, really educating the investor relations team on the deal so that if somebody calls and has questions, they can answer those without having to pull the whole team in. Obviously they will if there's something they can't answer. That's where they can lean on finance or accounting or the asset management team. I think the upfront process to become an investor, people submit, they fill out a really detailed form. That form's gotten longer over time. We've realized if it's the only time we have to burden them with 30 minutes of paperwork to fill out, it's important, but it really gets a good idea of who they are. We really try and build rapport with them before they've ever given us $1 and kind of build that trust. But again, I think it's just having somebody that's always thinking about the investor, how to make their life better, and not burdening other people on the team if requests come in or questions come in. Because, a finance guy might be working on getting a loan or raising equity. They don't have all day necessarily to drop everything they're doing just to answer one question. So it created a nice buffer.
Absolutely. It's really good. I like this is good answers. I'm curious about it. So that's why.
Yeah.
Now, you're raising a lot. I've seen people on Twitter where they're like, I'm raising $10 million, and then in 48 hours it's filled. Have you hit a record where you've raised a certain amount of money in a certain amount of time frame just by your cultivation of your investor relations? Is there a deal in mind? You're we raised $20 million in 3 days.
We have done that multiple times. I would say that's awesome that we can do it. Obviously the quicker you can raise it, the better. But I just think what it's really indicative of is to raise that much money that quick. You have a lot of people that already trust you. They're already comfortable with you, and they believe you to be the expert, to where, you send a deal and they're going to go spend 2 weeks trying to prove you wrong. They've kind of already trusted that you probably already know what you're doing. Again, a lot of these people are repeat. They've already been in deals with us before. And so, yes, we've done that several times. I would anticipate it'll get quicker and quicker, just because we have a lot of investors and we've built a lot of trust. And so even when we're not raising for a deal, and maybe something else our investor relations team does, is they keep people informed of what's going on at the company. They send them updates on stuff. So it's not like the only time you're hearing from us is when we have a deal. We want to keep building that trust with you over time. And, I still have people in my deals, great friends of mine, that have been in them for 15 years. They've probably done, I've got a couple that have probably done every deal I've ever done. And so when we send them a deal now, they're like, we're in. Somebody that's brand new, maybe it's their first deal, they'll take a little more time. But again, that's why we try and front load building the relationship, so that by the time you start seeing deals from us, there's been a rapport made and a relationship built. It's not just some cold email from some Fort Capital that you've never really heard of and you just got on some distribution list.
Yeah, and they're probably excited once that email comes in. They're like, here we go. Chris, how on the investor standpoint, how many of your investors came from when you were in single family? If you had any of the same investors from when you were in single family as opposed to now?
Oh, man. At that time, we just weren't doing a whole lot, so we didn't need a whole lot of investors. Right. So I think at the time, we probably had a max of 10 or 12. I mean, it was small. And I would tell you those 10 or 12, probably, if it's 10, I bet you, I don't know the exact number, I bet you 8 or 9 of them are still with us. They were betting on me when I was 21 years old, 20 years old. Like at that time, they were just taking a flyer on a young kid with a dream. I didn't really have a track record, but they knew I'd work hard. And, in this business, a lot of times you can build an incredible track record, but you can have a few bad years and kill it. And so I'm not saying you're only as good as your last deal, because I think the longer you've lasted and the more great deals you've done, investors will give you some grace if one doesn't make as much money as you thought it would. But, it's the next deal is, we always have our reputation on the line, and we want our investors to always know that.
Absolutely. That's awesome.
I wanted to ask, how do you, and this is kind of double-ended question because I asked you early on, but how do you manage your work-life balance? Because you kind of set your schedule on what you're actually doing on the podcast and with the business. You're managing $1 billion in assets. How do you kind of control what you do and what you make time for? And how do you manage the company to make sure, because you as an operator, make sure you have to make sure you don't leave you don't let somebody else controlling the wheel, because you are the operator, the main GP.
I think a few things. So one, on the business side, I kind of said I'm the founder, executive chairman. So my partner, he's the CEO and runs the business day to day, which means the day-to-day demands at Fort for me are less, but it doesn't mean I'm not always thinking about it or doing things outside. But very few things I'm ever working on at Fort have like critical deadlines for tomorrow. Those are, I'm thinking more long-term. But I think the bigger answer is really, if you ask most people like what's important to them, they'll tell you like, God, family, friends, and then they mention work like last. That's like the nice answer. But if you really go back to them and you're like, well, then show me your calendar, like show me how you allocate all that time. You can quickly see like, okay, it's work by like a mile and then everything else. And I think it's just, look, there's different seasons of life. When you're single and you're not married, you don't have kids, go for it. Balls to the wall, spend all your time on it. But as you have a family and as you have kids and as you have other things outside of work that you want to do, you just have to come to grips with how important are those things and be really strict with your time. I mean, time is all we have. It's the most valuable asset we have. Doesn't matter if you're rich or poor. We all get the same amount of it. It goes by in 24 hours. And so, one thing I used to do that, we were talking earlier about it taking a bit to book this, is I set my priorities up for the year. My assistant knows them. And even if there's an hour free on the calendar, if it's not lining up to what we said we'd do, we leave that hour free. And you just have to be ruthless. And, for someone that likes to please people and, I never want to disappoint anybody, that can be something hard to do. But at the end of the day, you can only spend time on so many things. And it's just, prioritizing. And as you move through life, those priorities will change. But I think the biggest thing is just kind of being aware. And I've had seasons in my life where some things were going great and other things were really failing, relationships or friendships or family or whatever. And a lot of that could be equated to no time spent nurturing those relationships or building them. Everything takes some amount of time. And so I by no means perfected it, but it is something I think a lot about. And I think that also comes as you just get older. You realize the days go by quick. We only get one life. There's only so many things we can work on. And so we got to put all of our attention into the things that are most important.
What does the future look like now that you're getting older and things change? Because I'm 32 and I've seen my priorities change as my kids get older, and I'm looking at the future and how I handle things differently. So, like, what does the future look like for you in business and in personal life? You have a succession plan? Do you want to hire a CEO and eventually pass the reins on, or is it something you want to do actively till you're ready to make that decision?
So my partner's CEO of Fort Capital. I'm 37 for anybody listening. So God willing and health willing, I have hopefully another 40 or 50 years. I love working. I love entrepreneurship. I love business. And so I don't see myself I don't ever want to quit. I think, you see some people that loved it, that sold their business, or they retired and they're miserable a year later. That's one thing, at least as it is now. I have no plans. My kids so I will probably start other companies or own other companies, but I'll do it in a way where I know my time required in that business. I don't think you'll ever see me go back to a startup where I'm starting from the ground up again and building. That takes a lot of time, at least not in this season of life. Again, I have 3 young kids. I want to be there. These years that they're young, they only happen once. Everybody says they stay in your house till you're 18, but by the time they're 12 or 13, they're kind of building a life of their own. Somebody told me the other day that once your kids leave the house at 18, for most families, you've already spent 90% of your time with them. So that's important. My faith is important. My friends are important. And again, I have none of this perfectly figured out. I think it's just recognizing what's important. But for me, I want to keep doing business. I love seeing the people around me succeed. So I enjoy watching the people that work for us or work with us or partner with us succeed. I love being home with my kids and my wife as much as I can. And so for this season of life, that's what I'm going to focus on.
That's awesome. I love your values and morals, man. That's incredible. I
appreciate it.
So what's your main, for your business right now, what's your main acquisition strategy for getting deals?
Yeah. So again, one is when you've been in a business for long enough, you build a reputation, the market knows about you. So that's one of the benefits of being around for a while. People know to call you. I don't think there's anything more important in business than being the first person someone thinks about, in our case, when they're selling an industrial deal. So you want to be top of mind, and you have to earn that. But at a more granular level, the software we built has an incredible way to manage our pipeline. We understand the deals we want to go after. And rather than hire acquisitions people on staff like we used to, we will contract with brokers in a certain market and sign brokers, or really anybody, and we'll sign an agreement with them that they're the local boots on the ground. They know the market really well. And we will give them all the information of all the deals they want to buy or we want to buy. And for that, we sign an exclusive with them that if they can create a opportunity for us, they'll bring it directly to us, and we incentivize them. We pay them more. We give them pieces of the promote. We do a big golf trip every year that they get to go on if they bring us enough deals. And in that situation, it's good because a lot of times acquisition people there's a lot more turnover in that department. Acquisition people, if you have them on staff, tend to be very entrepreneurial. In the old days of Fort, I think our top 4 people have all left to go start new companies, which is great. They're all great people. I'm rooting for them. But you can't really build a business where every 2 or 3 years your shining star leaves to go do his own thing or her own thing. And so by creating those relationships and markets, it gives us a way better market knowledge. We're able to incentivize them really well. But if they can also work on other deals if they want to, they don't just have to work on our deals. So it gives them a little more freedom and flexibility. And we found they stay around longer. And So we do a lot of cold calling. We do a lot of relationship building. And then we have brokers that'll bring us stuff. And every now and again, we'll participate in, I guess, what you'd call an auction. Very few deals we've ever bought by auction. But if we feel like we have an edge, there's sometimes where we're willing to pay up and buy something. But often in auctions, you're just willing to pay the highest price. And so that's not where we found most of our success.
Awesome. What is your current underwriting look like for when stuff's in the pipeline or something new comes across your desk? What does underwriting look like right now for you guys?
Yeah, I mean, right now we're trying to basically, so we do value add. We don't do development. We just buy existing buildings. So we're trying to solve for roughly a net 20 IRR over 5 years, which is basically doubling your equity over 5 years. And the way we do that is underwriting a deal that will stabilize yield on cost will be 200 to 250 basis points higher than the cap rate we could sell at. Obviously, in a raising interest rate environment, numbers have changed pretty drastically. Things have been pretty quiet, haven't gotten a lot done the last couple of years. But once things kind of get back into a normal routine, that's kind of where we like to land. And within the underwriting, we really want to have a good idea of how much of our return is coming from cash flow while we're owning it and how much of it is coming from the exit. And so I think where a lot of people get sideways and where, beginners get sideways is they'll buy these deals that's all predicated on selling it at the end and making all your money. And it doesn't really make any cash flow or anything in the short term. So at a very minimum, we want to make 15% of our return from cash flow while owning it. But most of the deals we do are more like 25 to 30% we get while owning it, and then the rest comes at the end. But we really try never to do a deal that's all predicated on what's going to happen at the end, unless you're buying a piece of land or something that doesn't have cash flow. Obviously, it's all going to come at the end. Or there's some unique situation where maybe you're buying a deal that has a lease that's way under market. The lease isn't renewing for 5 years, so you just kind of hold on it for 5 years, sign that new lease 5 years from now, and then you get all the value and sell out. But for the majority, we want to see 15 to 25% of our return coming from cash flow.
Absolutely. Awesome.
Now, you mentioned land. Do you do anything in the land space at all? Because me and Kyle were both land guys.
So it's funny. I love land, and we won't have time to go through it today, but if you saw our company logo, it wouldn't immediately jump out to you. But when I first designed it, it had to do with the idea that everything starts and ends with land. And at the time, early in my career, there was a time when that's really all we were doing was land. And we were buying oil and gas minerals. So it was a time where all we did was land. As we sit today, we don't really do any land deals. Every now and again, we'll come across an interesting deal that just makes sense to do, but it's not our core focus. So we're not out looking for land deals. But I would tell you, my partner and I come from a land background, so we still understand it probably as well as we did. And personally, I love land. I'd like to see our company at some point get back to where we're maybe have a land division.
That's awesome.
So I think it's hilarious because I say that all the time is that everything starts with land. You can buy a real estate storage, but when it comes down to it, it's a land business because it's all about location. I saw Gas Biz, Chris Helgeth. He said he bought a gas station and it turned into a Chick-fil-A over time just because he had the right location. It doesn't matter what it is; it's still a land deal. So I always preach that. Like when you said that, like yes, somebody gets it. Everything's a land deal. When you think
I won't give a huge history lesson. I'm going to botch it a little bit, but essentially, if you go back through the history of time, thousands of years or hundreds of years ago, the world really changed when they started having land ownership. Because once you could own a piece of land, then you felt good investing in it. You could mine it, you could farm it, you could do all these things. But before anybody owned any land, nobody wanted to take the risk to put any money into it because they didn't know if it was theirs. And then fast forward today, Elon Musk did some tweet thing the other day where he was basically like, you have to own the land to get the lithium out. You have to own the land to build the factory to make the battery. You have to own the land to build the factory to make the car. Like at every business, no matter what it is, has some land component to it. And often, as y'all know, a lot of these businesses that have been around for 40 or 50 years, the piece of land that they built their first building on 50 years ago is worth more than the business is. So land's incredible. We're not making any more of it. But it's also something, as y'all know, you don't want to lever it up and make huge risky bets with land. It's something that you need to be a little more conservative with unless you have a plan.
Absolutely. Absolutely. I think about my daughter goes to a school in a really nice area, and I know the numbers of what the school number does, but they own like 100 acres in the best part of town in the city in California. And I'm like, the land they're sitting on is worth way more than the business itself. And it's crazy.
Oh, yeah.
That's what happens if you're in a great location. You're really a land business. What is a quote Go ahead.
Oh, go ahead. No, I was just going to say, like, people, like, even if you go to like McDonald's, the joke about McDonald's is it's just a big real estate company that owns the best locations, and the way they make the covered land play is they just sell hamburgers. But a lot of these companies, you see people, private equity, buy businesses, and they'll immediately, sell off the land, or they'll split out the real estate because it's a critical piece. People have gotten a lot smarter about that, but yeah, I mean, at the end of the day, if you can hold a piece of land long enough, it's a good thing.
I think we saw that with the Red Lobster.
Yeah, it was just about
R.I.P. Red Lobster.
The greatest cheese biscuits in the world.
Yeah, right.
Now parceled off into a land business. No, I think it's a great understanding of the land business, and I'm glad somebody else agrees with me, because when I talk about land, everybody's like,
"Oh yeah,"
it goes over people's heads, and I'm like, you're investing in a land business, no matter what business you are in real estate, you're investing in a land business. That's it. What is a quote that is yours or somebody else's that you resonate with?
Oh man. I'll give you a recent one. There's probably a lot, but one that comes to mind. There's a guy, Mitch Rails, that owns a company called Danaher, which is one of the most successful public companies of all time. I think it's compounded like 18,000% over 30 years. Wow. But I was listening to a podcast the other day, and he just said it very simply. He just said, greatness takes time. And I think about that a lot. Like the best things in the world just take time, whether it's businesses, friendships, marriage. And we live in a kind of a short-term world today. People want immediate gratification. But again, you talk about that family that owned that 100 acres in California. Like, it just took time for it to be a great piece of land. You talk about, some of the businesses we all know and love. Those have been around for 30 or 40 years. If you had looked at them when they were 5 or 10 years old, they just wouldn't have looked as great. And so I think it's just that mentality that to do something really great takes a lot of time, and not to get wrapped up in, what's my result tomorrow, but what's my result in 10, 15, 20, 30 years. So I'll go with that one. Great takes time.
No, it's amazing. I think we're going to end it here. Where can people, can you tell us a little about your podcast and where people can find you online?
Yeah, I have a podcast called The Fort with Chris Powers. I've been doing it for 5 years. I interview entrepreneurs, leaders, folks in real estate, and just people I admire. Done 350 episodes, so check that out. I also have a Twitter account, Fort Worth Chris, or at Fort Worth Chris, or you can check out our company's website, www.fortcapitallp.com. There
you go. I think this has been a great episode. I appreciate you coming on, and thanks for sharing us some information, some good knowledge, and I think we had a good time. I think we threw some curveballs at you that even a podcaster, he was stumped. I take that as a compliment. So
it is a compliment.
For everybody here, go like, share, subscribe. Go check out Chris on Fort Worth Capital. The Fort. Ugh. So I'm getting tongue tied. See, even the best.
Fort Podcast or fortcapitallp.com.
The Fort Podcast. There you go. We'll see you next time. Go like, share, subscribe. You know what to do. We'll see you next time. Have a great day, guys. Bye.
Hey, if you'd like to meet us in person, we do an annual event every year. Thehiveislive.com/summit. We'll see you there. Have a good day.